In the next few minutes, you'll finally understand debit and credit so clearly you could explain it to someone else without even memorizing anything. And I'll prove it with one simple story that makes everything click. Don't skip this. This is where most people finally get it. You've been taught debit means left and credit means right. And that's exactly why you are confused. Why do debit and credit even exist? Let's start with the real confusion. Why do we even have debit and credit? Why not just add and subtract? Here's the truth. Accounting is just tracking where money comes from and where it goes. That's it. Every transaction has two sides. Example, you buy a phone for 10,000 rupees. Money leaves your bank, but you get a phone. So something goes down and something goes up. That's why we need two entries. Debit one side, credit the other side. Not left, right, not good, bad. Just two sides of the same story. Debit and credit are just a way to keep balance. If money leaves your account, does something else increase? Think about it. So, what actually is a debit? This is where people mess up. They try to memorize rules instead of understanding. Let's fix that. A debit means something is coming into your business or something you own is increasing. Example, you put 5,000 into your business, cash increases, that's a debit. Another example, you buy a laptop increase, that's a debit. Simple rule. If what you own increase, debit increase in things you have, you receive 1,000 from a friend. Is that a debit or credit? Debit, because your cash increased. Then what is a credit? Now the other side. A credit means something is going out or you owe more or your income increases. This part has layers. Don't skip this. You pay 2,000 rent, cash decrease, that's a credit. Another example, you take a loan, you now owe money, that's a credit. Cash leaves credit, if liability increase, credit. Credit is either money going out or obligations going up. People think debit is bad, credit is good. Wrong. Banks flipped that meaning, accounting didn't. How do debit and credit work together? Now, this part is that makes everything click. Every transaction has both. Always, no exceptions. Let's go back to the phone example. You buy a phone for 10,000. What happens? Phone increases, debit. Cash decreases, credit. Balanced. Another example, you earn 5,000 from a client. Cash increases, debited. Income is increases, credit. Every debit has a matching credit. That's the system. If only one side is recorded, the whole system breaks. That's why accounting catches mistakes. The simplest way to never forget this again, forget all the complicated rules, use this cheat code. What come in? Debit. What went out? Credit. That's it. Example, you pay electricity bill 1,000 rupees. Cash went out, credit. Expenses increased, debit. Still balanced. This will fully click in 2 minutes when we summarize everything. Stay with me. Here's the simplest version of debit and credit. Debit is what you get, credit is what you give. Every transaction is give and take. That's all accounting is. No magic, no memorization. If this finally made sense, don't stop here. Next, you need to understand assets, liabilities, and expenses. That's where beginners usually get stuck again. And subscribe if you want accounting explained like this simple, fast, and actually understandable.